Hi everyone, my name's Chris Fenter, and today we're going to talk about getting into cryptocurrency, specifically within Australia, although the content in here should be useful for whoever you are. So I put this video together because obviously there's a lot of talk about Bitcoin lately, and I'm also getting asked by relatives and friends and everyone, how do you get into it, Chris? What is an exchange? What is a wallet? How do I do things? And so I thought I'd put this together just as a bit of a guide to help you. So let me get rid of myself here. And today what we're going to talk about is we're going to do an overview of what are cryptocurrencies, things like Bitcoin versus altcoins. We're going to talk about exchanges, what are the Australian exchanges you can sign up to. We're just going to talk about wallets, and something that you really need is quite important if you're going to be dealing in cryptocurrency. And we're also going to then talk a lot about security and what it means to be secure when you're trading cryptocurrency. We'll do a little bit of what I call trading basics, and I'll also share with you some resources that I found were really helpful to me when I got started. So it's my first YouTube video, so let's see how we go. Right, so the disclaimer or the warning, cryptocurrency is a high risk activity, and the risk can be, or the rewards can be very high, but so are the risks. And it's important that you really only trade with money that you're willing to risk and that you can certainly afford to lose. So the information in here is, for your education only, and certainly nothing in here constitutes investment advice. And the opinions in here are my own and my own only. So disclaimers out the way, let's get into it. So everyone's talking about it. That's the historical chart. Actually, it's a 7-day chart for Bitcoin. And when I started producing this video, I think Bitcoin was at about 10,500. And probably 2 or 3 days ago, when I nearly finished recording it, it was at nearly 19,000, and today it's back down to 13,500. So it certainly can be quite volatile, but everyone's talking about it. You can't go into a taxi, you can't go into a lift at work or a work event without people talking about it. So it seems like the word is certainly getting out to a point where the general public are now becoming aware of it. Hence all the questions I keep getting asked. So, quick overview of cryptocurrencies. So, cryptocurrencies are sometimes called virtual currencies, and they're basically a medium of exchange, and they use advanced cryptography to secure and manage and verify the transactions. And there's lots of different types of cryptocurrencies. The original was one called Bitcoin, or the original mainstream one, should we say, and it was developed by a guy called Satoshi Nakamoto in about 2009, although no one really knows who he is. And since then, numerous other variants of cryptocurrencies have been created, and most of them, when they're not talking about Bitcoin, are talking about what's called altcoins or alternative coins. So at the time of writing, which I think was on the 4th of the 12th, 2017, there were about 1,324 different currencies listed on CoinMarketCap. So we'll look at some of these links later, but that's a site you'll spend a lot of time on, and often can be a great mood indicator when you start looking at that. So the original mainstream cryptocurrency, as I said, was developed by Satoshi Nakamoto, and it's called BTC when it's listed on an exchange. And since then, there have been, as I said, 1,324 new coins created on top of that. Bitcoin certainly has the largest market capitalization, and it's worth over 56% of the total cryptocurrency market capitalization, which has varied anywhere between 350 and 420 billion over the last few days. The next biggest is something called Ethereum, and Ethereum is known on the exchanges as Ether, and Ethereum was invented by a guy called Vitalik Buterin in 2013, and it's based on an open source version of the blockchain, and it's kind of like Bitcoin, but it allows you to have things called smart contracts where you can execute pieces of code as part of a contract. So I can say, when a certain thing happens, send a piece of ether to two different parties involved in a contract. And the smarts in that allow you all kinds of different uses. So a lot of the altcoins that you see out of there, those 1,324 coins, are built on top of the Ethereum blockchain. So it's kind of like a platform that enables other cryptocurrencies to be traded. Ethereum is open source, and it's the underlying platform, as I said, behind many of what we call token-based cryptocurrencies currently trading out there. So if you're interested in how Bitcoin works, what the blockchain technology is that underpins Bitcoin and Ethereum, I wrote a simple to understand, but very detailed article on this a while ago. And, once you read this, you'll certainly be king of the dinner table. And what I try and do is explain it in simple terms, how trade and exchange works, and then how things like a blockchain make that better. I'll pop it open quickly for you and you can have a bit of a look. So here it is here. It's on something called Blue Notes, and it's called Everything You'll Ever Need to Know About Blockchain and More. And here we talk about banks, how you transfer money traditionally, what a distributed ledger is, how the cryptography process works, how Bitcoin mining works. So a really good detailed explanation of what goes on inside of Bitcoin and cryptocurrencies and blockchain. So a little bit more about Bitcoin. So the first coin was mined on the 3rd of January in 2009. About 1,800 Bitcoin are mined every single day. And what's interesting is that, every single Bitcoin transaction takes about 300 kilowatts of electricity to mine. And that's enough to boil 36,000 kettles full of water every day. There will only ever be 21 million Bitcoin. So a lot of people say, what is this thing? People can just create more, it's digital. Well, it can't. It's built into the code of Bitcoin, and the way it works with mining, and the fact that the problem of mining gets more difficult all the time means only 21 million Bitcoin will ever only exist. And that's part of what makes it valuable. As people get more Bitcoin and more Bitcoin's mined, there's less of it, and therefore it becomes more valuable. Each Bitcoin is divided into 100 million units, and each of those units is called a Satoshi. So 1 unit is a Satoshi, 1 unit is 0.000000001 Bitcoin. And right now, 10 Satoshis is roughly 0.000001 Australian dollars. Something that most people don't know, or a lot of people don't know when they start out, is you don't need to buy a whole Bitcoin. So currently the price of Bitcoin in Australia is roughly $19,000 or $20,000, depending on what minute of the day you're looking at it. And you don't have to spend that much to buy a whole one. You can buy 0.001 of a Bitcoin. You can buy 0.5 of a Bitcoin. You can buy 1/1,000,000th of a Bitcoin. So it's up to you. The exchange is allowed for that to occur. So Bitcoin cost $1 US in February 2011. And this afternoon I looked at it and it was about 13,500 US dollars. So been a phenomenal growth. The Bitcoin code is also open source. So what that means is the software that underpins Bitcoin is freely available for anyone to look at and audit. You can go to GitHub in the link that I've got below. You can actually download a copy of the Bitcoin source yourself. And what that means is that openness means all the different people looking at it, we can be sure that there's no bad code in there or there's nothing dodgy going on in there, and it makes it much more trustworthy as an overall solution or platform. So if you're going to get into cryptocurrency trading, you're going to need to understand what an exchange is, and you're going to need to sign up to one. So what is an exchange? An exchange is effectively, it's an online marketplace that allows you to buy and sell cryptocurrencies. Exchanges match the bid and the ask prices of buyers and sellers in real time, and they also give you the current market price-wide information. So you get to see what the current market price is, you can see all the bids, you can see all the asks, and you can say, I want to buy a Bitcoin at a particular price, or I'd like to sell it at a price. And if someone else wants to sell it to you for that price, the trade goes through and you get it. You have to sign up to an exchange. And here's a picture of an exchange down below. So there are numerous Australian exchanges. And they're also very global ones. There's very big exchanges. Lots of the global ones that people hear about are GDAX or Coinbase or Bitfinex or Poloniex. However, those are overseas-based exchanges, and they're quite difficult to get your Australian dollars into them if you're going to trade, although some will allow you to sign up with a credit card. What I want to just talk about some of the Australian exchanges, which are a bit easier to sign up with because you can verify your identity, and then you can transfer Australian dollars into the exchanges and they allow you to trade. Not all exchanges are the same at all, and the exchanges differ in a number of areas. So some of the things that they differ in is the types of cryptocurrencies they trade. Remember, there were 1,324 different currencies. So not all exchanges trade those. So some exchanges trade just Bitcoin, some exchange Ether and Bitcoin, some exchange a number of the altcoins. The other thing that's different is the fees. So the cost of buying and selling and transferring your money into and out of exchange vary quite wildly across different exchanges. They also vary by the banks that allow you to transfer money to and from. Some exchanges only allow certain banks to transfer money in, and the methods differ. So a lot of them you can do BPay, some of them you can do internet banking transfers, some of them use Polypay, and there are a few that use credit cards as well. The other thing that varies between exchanges is their trading sophistication. So some allow you sort of more advanced trading mechanisms and putting stop losses in there, and other types of trading tools that allow you to sell at certain prices, or sell when a price hits a certain level, sell when a price goes below a certain level, buy when a price gets above or below a certain level. And the different tools in the exchanges vary quite greatly. The other thing that varies a lot is what we call the liquidity of the exchange. So how much Bitcoin do they have available to buy and sell, or cryptocurrency? And some of the exchanges are a lot more busy and popular, and therefore they've got a lot more liquidity in the exchange and there's more trading occurring. Others have less so. And the other thing is the price spread. So the difference between the buy price and the sell price on the different exchanges can vary quite wildly. And you can see one exchange will be selling Bitcoin for 20,000, another will be selling it for 19. And it can literally vary by that much at any point in time. So it's important to check where you're getting the best deal on the different exchanges. Some people might say, great, that's an opportunity for what we call arbitrage. The problem is Bitcoin takes too long to send from one exchange to another. So, during busy periods, it can take anywhere from 40 minutes to 10 hours. And so the ability to arbitrage that difference across exchanges is not possible like it is in the stock market in real time. A really great resource I found that compares exchanges and the prices and the trading fees is this thing called Blockcoin. So I'm going to click on it over here and let's go have a look at Blockcoin. So you can see what Blockcoin has is a list of all the exchanges in Australia, and it's got their bid and ask price, their last high, their low, and also their fees. And if we just look at this over here, you can see one exchange has got Bitcoin going for 20,000 bid, and Buy Bitcoin has got it for 16,000. Here Cointree has got it for 17,000, and BitTrade is 18,500. Now Coinbase, these are probably US dollar prices, so that's probably why there's such a big difference here, and that's certainly a big difference. Or should I say, that one there is in US dollars. So you can come along here and have a look, and it gives you, the differences. ACX, for example, has 0 fees buying and selling. If you go to Deal Finder, that gives you the best price on all the exchanges, so it loads up in real time, and it's just taking a second to call out to all the different exchanges and get their prices. And there you go. So it loads up now. So we can see Brighton Peak is out of coins. ACX is got a great price of 20,000 here. CoinJar, different prices. And the best place to sell. So ACX has also got the highest selling price at the moment. And you can see hard block or different coins here. So great resource, and I highly encourage you to use that. So there you can see some examples of the exchanges and the selling fees, and go to that website link, and that will show you what's what. So far, I've only had experience with a couple of these exchanges, so I can't comment on all of them. I've used CoinSpot, and CoinSpot's really great because it has a lot of coins. I can't remember the last count, but I think there were over 65 different cryptocurrencies selling on CoinSpot last time I checked. So a lot of the things like, your Moneros and your Dashes, Litecoin, a lot of the popular cryptocurrencies, but 65 of them are available on CoinSpot. ACX.io is the other exchange I use, and what I really like about that is there's zero fee for trading. So there's only a fee when you take money out of the exchange of 1%, but all your trades are free effectively. Now, the difference is, though, they're only limited to 4 currencies at this point in time. They've got Bitcoin, they've got Bitcoin Cash, they've got Ethereum, and they've got one other that I don't even know what it is because I don't even trade in it. So do your own research, figure out, what's more important, number of coins, prices, selling fee. What you're probably going to end up doing, what I hear is a lot of people end up signing up to numerous exchanges, and that allows you the flexibility of choosing what you want. Yeah, I've got a few links there and you can check it out yourself. So signing up to exchange can be a bit tricky. When you sign up to exchange, specifically in Australia, you're going to have to identify yourself, and for good reason. So in Australia, we have what's called KYC, Know Your Customer, and AML, which stands for Anti-Money Laundering Laws. And this means that people who trade in money effectively are legally bound to identify who is signing up and using that account. And, that protects us all. So what you need to do to sign up to one of these exchanges, you're going to have to get your passport or your driver's license. You're probably going to have an energy bill or utility bill that sort of matches the address on your license. You're going to need a valid email address, and you might be asked to take a photo of yourself holding up a piece of your ID with the name of the exchange and a current date written on it, and take a photo of yourself holding that up and send that into the exchange too, so it can identify you against your ID real time with the date written down. Once you do this, then depending on the exchange that you sign up to do, it can take anywhere from 24 hours, 72 hours. I've heard of it taking longer. So be prepared that this could take you 5 days or so from the time you sign up till the time they say, hey, you're a valid person and you're allowed to trade on the exchange. Once this is done, you can then transfer Australian dollars from your bank account into the exchange. And as I said before, different exchanges have different options for doing this. So they range from Polypay, which is immediate, to taking 24 hours via an internet banking transfer to get from your bank account into the exchange. And a lot of the exchanges, when you first start, will also limit the amount of money you can put in there. And certainly most of them limit the daily amount you can either load in and daily amount you can take out as well. So just be across that, depending on how much money you want to trade. So big bright warning, you might be very enthusiastic and say, yeah, I want to get into Bitcoin, I want to buy. It's going to take you a while because first of all, you're going to have to sign up to an exchange. Could be for anywhere from 24, 48 to 72 hours. And then it's going to take you probably, depending on, or your bank account and the type of thing, another 24 to 48 hours to get even money onto the exchange before you can do it. So you're looking at somewhere from 3 to 7 days plus to get onto the exchange and be able to start using it. So next thing we're going to talk about is wallets. So if you're going to be trading Bitcoin, you need a place to keep the cryptocurrencies that you trade. And there are lots of choices here. And I've got some pictures of the different choices. So we've got an online wallet over here. On the right, we've got hardware wallets. These are 2 wallets by a company called Ledger. And that's a Ledger Blue and that's a Nano S. We got phone-based, mobile-based wallets. This is one called Bread sitting on an iPhone. And you've got paper-based wallets. So we're going to talk a lot about wallets. What's the pros, what's the cons of different wallets. Okay, so what's a wallet? Well, a wallet effectively gives you access to the digital currencies that you own. So the name can be misleading because unlike a physical wallet where the money you own actually sits inside the wallet, A digital wallet doesn't actually store your cryptocurrency. So you don't have your Bitcoin sitting inside your actual wallet. The digital wallet really doesn't contain the Bitcoin, doesn't contain the Ethereum. It contains a link to your cryptocurrency that sits on the blockchain. So when you buy cryptocurrency or you trade it, there's a entry in a ledger that occurs in the blockchain, and that entry sits on a particular block within the blockchain, and that's identified by a unique identifier. And you have what's called a private key, and the private key identifies the link to the cryptocurrency that you own, and it allows you to transact on that cryptocurrency. So effectively, the job of your digital wallet is really not to store the cryptocurrency, but it's to store the private keys that point to the transactions and the money that you own. And so it feels and looks like the same, but it's really quite different. So your private key is a very, very important thing that you have to keep safe. With the private key, anyone can access your cryptocurrency and anyone can transact with your cryptocurrency. They can send it to another wallet, and once that's done, you've lost it. So think of it like if you dropped cash on the street, it's gone. If you lose your private key, it's gone. And there have been plenty of cases of people who owned a lot of Bitcoin who have lost their wallet, they've lost their private key, and that money is gone. They will never ever see it again. And they are kicking themselves now. And that can happen with any of the cryptocurrencies. So keeping your private key very, very safe is something extremely important that you're going to have to learn a lot about. There are multiple wallet types, as I talked about before. There's online wallets, there are software wallets, there are paper wallets, and there are hardware wallets. And all of them have got different pros and different cons, which we'll talk about next. So let's go to online wallets first. So online wallets are wallets that typically sit on exchanges, or that can run from your PC. The great thing about online wallets is they're very easy to set up. They're usually linked to an exchange, and they're accessible from anywhere in the world when on your computer or whatnot. So they're accessible from the internet anywhere. They also have what I'd say is called high liquidity. Either the cryptocurrency or the fiat money that you have is connected to that and available straight away, and you can sell and you can buy with that very, very quickly. And they also typically cost nothing. They don't cost anything to buy, that kind of wallet. So what's the downside of that kind of wallet? Depending on the type of wallet, if it's with an exchange, remember I talked about the private keys. Well, you don't own the private key in that particular circumstance. The exchange does. So when you log into the exchange with your exchange account, a wallet's created for you, and that key is stored within the exchange. If something goes wrong, if that exchange gets hacked and someone gets that key, they have access to your funds and they can take them. Money sitting on these types of online wallets and exchanges is also more susceptible, I guess, for hackers. Hackers really love attacking exchanges, and there have been a number of those where they've been able to steal money because, it's obviously a bigger target. It's easier. You don't control the crypto on that. It's owned by someone else, and they give you the ability to access it and transfer it and use it as you please, but it's accessed through an online application. And the exchange decides. The other thing with an online wallet is if the cryptocurrency that you're trading in does what's called a fork, then if your money is sitting on an exchange, you may or may not get that, because remember, the exchange owns the wallet, and if the cryptocurrency forks, then when a new currency is created out of that fork, the exchange gets the money, and sometimes they've chosen to keep that. So whereas if you own the money in your own wallet, then you get it. Now, what is a fork? I won't go into all the detail of it, but there are many forks that have occurred. So a good example of that recently is there was Bitcoin, the original. There was a fork of that called Bitcoin Cash, and anyone who owned Bitcoin at the time of the fork also got a Bitcoin Cash amount of money. Similar to Bitcoin Gold was another fork that occurred. So these forks do occur, and you can think of them like a dividend, if you like. And if your money's on an online wallet, depending on the type of wallet, you may not get that dividend. The next thing is a software wallet. So A software wallet is it's probably more secure than online wallet. The data is available on your own computer or mobile device. It's easy to back up yourself, and you control access to the cryptocurrency through the wallet at any time. There's also zero cost to set up. These wallets are free, and you can download them to your mobile device or to a computer. So example of a software wallet is one of the ones I showed before, something like Bread Wallet, where you download it onto your mobile phone if you're on iOS, or there's different types on Android. The one thing with these is that if your computer is stolen, so if you've got your private key stored in a wallet on your computer at home and that computer is stolen, then those private keys are gone. And if you haven't backed up that wallet, then you will lose your money. Same thing if you put it on a mobile phone. So if you put in a wallet like Bread Wallet and you store your cryptocurrency private keys and links to your transactions on that wallet, and your mobile phone is stolen or broken and inaccessible, and if you haven't backed that up, then once again, you have lost it. So hackers can also hack computers that have got wallets on, and they like to do that through malware. So people accidentally download malware, they watch people entering their wallets, they look at their passwords, and they're able to steal their money that way too. So they're more safe than online, but still have some risk. They also require a little bit of technical knowledge, and they definitely require you to back them up. So you get an option when you create one of these wallets to do what's called a backup, and they ask you to write down 12 words or 16 called a recovery phrase. And they're just random words, and you have to store those random words very safely, because with those 12 random words, you can recreate your wallet and get access back to your funds. But if you haven't backed up that recovery phrase, then you have dropped your cash on the street equivalently, and it's gone for good. So next one is a paper wallet. So a paper wallet, you control where and how you store the wallet. You can print out a paper wallet, store it in a safe, store it in a bank, safety deposit box, wherever you want to keep it. It's much more secure than an online wallet, and it's certainly much more secure than a software wallet. Nice thing is it can be stored without an internet connection, and it doesn't require a computer or a mobile device to store that. And it's zero cost. So downsides though is it's on paper, and paper can get damaged, it can fade over time, paper can get physically stolen. So if you've broken into your house and your safe is stolen, someone steals your paper wallet, they now have access to your cryptocurrency. And there's also a little bit of technical knowledge required to generate and use a paper wallet properly. And the other, I guess, challenge with paper wallets is they're very low liquidity. So if the market's moving very quick and you need to sell, then getting the money from your paper wallet into the exchange can take a little bit of time if you need to, physically access it, and it's at a different location or in your safe or at a bank or in a safety deposit box. It can mean that the time taken to react is slow, and depending on what type of trading you're doing, that may or may not be a problem for you. The nice thing about a paper wallet though is you do control the private keys, and in the situation of a fork, like I talked about before, you can manually claim the other alternative coin that the fork occurs. So if you own Bitcoin and the Bitcoin Cash fork happens and you've got a paper wallet, a copy effectively of your coins are put into the Bitcoin Cash blockchain, and you're able to manually recover those at some point, so you haven't lost them. The final type of hardware wallet is, or final type of wallet is a hardware wallet, and a hardware wallet is the most secure. It's also possible to back up a hardware wallet. So when you set up a hardware wallet, they give you a series of words to write down, and again, you store those very safely. And if you lose the hardware wallet, or if it breaks, with that recovery phrase, you can recover it. The nice thing about a hardware wallet though is if you do lose it, no one else can access it. They're protected by passwords, they're protected by two-factor authentication, and the data is encrypted into physical encrypted chips on the hardware wallet. So there's minimal likelihood of hacking. Hackers aren't going to be able to steal the data on a hardware wallet, at least within the bounds of the technology we have today. Maybe when quantum computing becomes available, that might be a different story. One of the things is they are expensive. Don't know why I put that as a pro. Actually meant to put that in the con column. Another pro though is the wallet is when a fork occurs, you get given the coins automatically if the wallet company supports that. So in some of the recent forks like Bitcoin Cash, for example, the Ledger, people who own the Ledger hardware wallet automatically got a process to collect their Bitcoin Cash out of that. So it just makes it a little bit easier. You can do it manually though. So on the con side, they're expensive. Nano S in Australia is about $99, should I say, and a Ledger Blue is roughly $400. You do need to look after them physically. They're an electronic device and they can get broken easily. They can be physically lost, although if you do lose them, no one can actually access the cryptocurrency on them, but they're expensive. They do require you to store your recovery keys very carefully though, so that you could re-access those. They've also got a lower liquidity, and what I mean by this is, you know, if you have your wallet with all your Bitcoin or all your other cryptocurrency stored on that, on a hardware wallet, and something's happening in the market and you want to trade some of that Bitcoin, you've got to plug in your hardware wallet. You've got to send the Bitcoin from your wallet to the exchange, and that can take a while depending on the exchange, depending on the backlog of unconfirmed transactions on the blockchain. This can take anywhere from an hour to 10 hours sometimes, and the market can move a lot in that period of time if if it's volatile at that point in time. Also, if you don't have the physical hardware wallet on you, if it's at home, if you're traveling on a business trip and it's not with you, then you're also going to be stuck and there's nothing you can do about it. So those are some of the pros and the cons of the different wallet types. So wallets versus exchanges. So I've heard some people say to me, Chris, do you even need a wallet? Why can't I leave my money on a cryptocurrency exchange that I purchased it from? Well, you can. So you can log onto the exchange, you can convert your fiat, your Australian dollar money into the exchange, you can buy Bitcoin, and you can leave your Bitcoin on that exchange. And it's accessible, it's highly liquid, you can sell it, you can trade it, you can do whatever you want with it. And so it's definitely an alternative, and there are people that do this. Should you, is the question. I guess it depends on your trading strategy and how much risk you're prepared to expose yourself to. So if you're buying cryptocurrencies for long-term value gain and you're betting that this stuff's going to be worth a lot in the future, then keeping it on exchange is probably not the smartest idea. You want to move it to one of the other wallet types, whether that be a software wallet or a paper wallet, or probably best still a hardware wallet. And when you leave your cryptocurrency on an exchange, remember the exchange creates a wallet that stores your keys, and keeping these keys safe is now the job of the exchange. And exchanges are prime targets for hackers, and if an exchange gets hacked, there is a very good possibility you may lose your coins or your money forever. And there are many cases that this occurred. The exchanges are prime targets for hackers, and they get hacked all the time. Here's a list since 2014, and I know there's been another one, even quite a major one since this, where about $60 million worth of Bitcoin was stolen in the last week. But going back to Mt. Gox, which was the most famous one, where $473 million was stolen. Back to recently, where the Tether in November 2017 was hacked and 30 million stolen. Now, not all these Hacksman customers lost their money, by the way, but someone lost their money. So you have to take a big risk if you're leaving your money or your cryptocurrency coins sitting on exchange for any long period of time, and decide whether the speed of trade and exchange and liquidity you get by doing that outweighs the risk of you leaving there and someone packing up shop and walking away with either your money or your coins. Right, so let's talk about some approaches to wallets. So your situation might differ, but here's one approach you could use. So for Bitcoin, Ethereum, any altcoins for that matter that you intend to hold for a long period of time, for long-term gain or for whatever reason, should be stored in a hardware or cold storage wallet, like a Ledger, NanoS, a Trezor, or even a paper wallet. And in Australia, there's multiple places you can get them. You can get them on eBay, Amazon. There's a local place called CoinStop. The hyperlink's having a bit of trouble for some reason. So here you can see the CoinStop website, and you can see they have Trezor, Ledger Blue, and NanoS, although currently all out of stock, so it must be popular. So you'll have to shop around for one of those. So store your hardware wallet recovery phrases securely away from the device. I can't stress this enough. If you get a hardware wallet, it's going to ask you to write down a number of words and recovery phrases. Take that phrase, write it down, probably keep 2 backups of that phrase, give one to your parents or someone you really trust, and keep one in your safe or wherever you want to hide it, that you think is somewhere that A, you'll remember, and B, no one else is going to find. Do not, whatever you do, store it with the hardware wallet or device. If you don't want to invest in a hardware wallet and you don't want a paper wallet, then the next best option is really a software wallet on a separate mobile phone that you can store somewhere physically safe. So depending on whether you use something like iOS or Android, there are different wallets. So, topic too long for discussion here, but there's examples. I used to use Bread and Jax. Coinomi have a wallet. All of these have got their pros and cons, so something definitely to consider. So a couple of things though, when you do choose a wallet to put on a mobile phone, open source wallets are preferred. Open source means the code is freely visible. You can check it if you're technically minded, or the community, you can be sure, has checked it to make sure that there's nothing inappropriate on there. And the code is visible and that the code can be trusted. So most of the wallets that are open source will say they are. Bread, for example, is. Jax, certainly at the time of me publishing this, was not. Keep the wallet recovery phases stored securely away from the device. So same as a hardware wallet. When you have a software wallet on an iPhone or an Android or something like that, you will have to write down a 12-word recovery phrase. Leave that somewhere very separate and safe from the device. I would also suggest you factory reset the mobile phone before you install any wallet software. Also, make sure it's a separate phone. Don't put it on your daily phone that you use every day. Get an old phone, or buy a new phone that you plan on keeping. But whatever it is, factory reset it, and then only use the wallet application that you're going to store your coins on that phone. Do not put anything else. Don't download games. Whatever you do, just have that device with only one app on it. Also keep it on airplane mode all the time, and only access the internet when and if you need to transfer coins to the wallet or transfer your cryptocurrency from the wallet. And also make sure you download the real wallet from the developers. There's tons of fake sites that have wallets that seem like the real thing. You download those, you put in your private keys, or you transfer Bitcoin into them, and before you know it, they will be gone if it's a fake wallet. So a couple of things to keep in mind if you do use a mobile phone based wallet to make sure that you follow those guidelines. So with that approach, whether you store it in a hardware wallet or whether you store it in a software wallet based on a mobile phone, what you then do is when you want to trade, if your coins are stored, or your references or your private keys are stored on there, and you want to send your coins to the exchange, you then access the hardware wallet, or you access the software wallet, and you send the coins to the address that the exchange will give you for your local wallet. Now be aware, this can take several hours to occur, depending on how busy the blockchain is, what the unconfirmed transaction are, what the mempool size is. There's some technical terms here, but basically it can take 40 minutes and it can take 10 hours. You have a choice of how much you pay in transaction fees. That can speed things up, but even then I've seen this take quite a long time. So it's not going to be instant to get it off your hardware wallet or your iPhone based or Android based software wallet to an exchange. Will take anywhere from 1 hour to 10, 24 hours, depending on how busy the network is. So be prepared. And as I said, use a separate phone and keep it stored securely. Hide it, keep it in a safe, do whatever you need to, treat it like it's a wallet full of cash. So a word on security. Hackers love cryptocurrency. Certainly a lot easier to steal than robbing a bank, and people are generally don't take security as serious as they should. And the pseudo-anonymity that comes with cryptocurrency means that although you're not anonymous, there are some exchanges in the world that do allow you to sign up without identification. And if a hacker gets your coins, typically they've signed up on one of those exchanges. They will get your Bitcoin into there and then find ways to transfer your money out, and you won't see it again. So it certainly is traceable, but as I say, the anonymity can vary depending on the exchange you signed up. So it's why hackers really love cryptocurrency. If you trade cryptocurrency, you also need to be very vigilant and follow established security protocols. So an easy way to visualize the concept of a Bitcoin wallet and address is to think of it like a glass safe. So you've got this glass safe and you can see into it. That's the public blockchain, and the ledger's there with all the transactions there. However, no one can access your money. It's a glass safe. They can see into it, but without your private key, you can't access the money. So the private key is like your combination to the safe. You access that safe with the private key. And so therefore your private key is the combo to your safe. You don't give that out to anyone. Never give your private key to anyone, and do not ever type your private key onto a website. So no matter what the website says, no matter what email you get in your inbox saying, put your private key in here to claim your Bitcoin Gold or your Bitcoin Cash or anything like that, do not do it. It's a scam. They will take your private key and they will steal your money. So there's only one place you ever use your keys, and that's to access your wallet, and you then send money from your wallet to other exchanges. The other thing is keep your wallet recovery phases secure and backed up. So take a copy, write down the 12-word recovery phase, or 16 or 24-word, depending on what physical hardware wallet you use. If you have a software wallet, you're also going to have a recovery phase. Keep those separate, save them somewhere, give them to a parent, give them to a relative, someone you trust, so that if you lose your wallet or your iPhone breaks or your physical hardware wallet breaks, you can get your money back. Don't back up these recovery phases on the device you're using it. So if you have a software wallet on your PC, please make sure you do not have a file on your PC called software wallet recovery phrase. I've seen it. I've seen people do that. They have Dropbox accounts with their listed private keys. Do not do stupid things like that. Hackers love that. You're just making it easy for them. The other thing is keep your virus and malware scanning up to date. So if you're using a PC, make sure you use a PC that you feel is secure. I do not recommend you trade cryptocurrency on the same PC you let your children play games on. There are lots of really dodgy websites out there that the kids get on. They download malware. Some of that malware is really smart. It can understand a Bitcoin address. You might send money to your wallet and then you want to send it to an exchange. And when you type in the address of the exchange, this malware can identify the Bitcoin address and at the very last second switch the address. And when it switches that address, you hit send. Your money's gone. You will never see it again. And that can be done by malware. So your virus scanners need to be up to date to make sure that doesn't happen to you. So as I said, separate your usage. Don't keep your software wallet on your daily use phone or computer or laptop. Have a separate laptop, separate phone. Keep the malware up to date. Delete everything off there you can and just have that one bit of software that you use, and don't connect that device to the internet until you have to. The final word, or second final word, don't store large sums of fiat, or that is Australian dollars, on cryptocurrency exchanges. You saw that list of hacks before. Your money can disappear, so please take this seriously. And finally, use a cold storage wallet if you've got any significant amount of currency or cryptocurrency that you own. It's probably the safest way to store your private keys and allows you to trade far more safely. It's not susceptible to the malware and the type of hacking that can occur if you're on a software version of that. So follow those rules and you should be safe. It's a lot scarier than it seems, but if you just follow those protocols, you're going to be good. Trading. So you now have a account, you've signed up to an exchange, you have a hardware wallet, and you are looking to trade. So up front, I'm not a trading expert, and this is certainly not trading advice. There are plenty of people out there who are awesome at this. Jump on YouTube. There's a couple of guys, one called Data Dash and another guy called Tone Vase, who are particularly good, and they're going to teach you a lot about trading. So what I'm going to really do is just share some, basic do's and don'ts. So there's a nice picture there. That's the Coinergy exchange, and you can see the price of Bitcoin in US dollars over the last little while. So some trading do's and trading don'ts. Only invest in what you can afford to lose. Said this before, say it again. This is a high risk activity. Only invest what you can afford to lose. Do your research for the market of the cryptocurrency you're interested in, and look at its history, look at its volatility on CoinMarketCap. Make sure you understand what you're investing in. Don't invest based on hype. You'll hear a lot of people talking about the latest initial coin offering or cryptocurrency. This stuff can go viral, and there's lots of what they call pump and dump activity. So this viral hype occurs, the price of the stuff gets pumped up, everyone jumps in. People have what's called FOMO, fear of missing out. They jump onto this cryptocurrency, and a lot of the time you're not going to time the top, and these people who pump it will eventually what's called dump it. So it'll go up really quickly, they will sell at the top, you won't know when they sell it, and you're going to be last in and lose your money. So be very careful, don't invest on hype, do your own research. Okay, so altcoin investing is risky. It can be very rewarding, but very risky. Understand what you're investing in. So you need to ask yourself questions, or ask questions of the people you're looking at investing in. So if there's an altcoin, what is it? Is it a currency itself? Is it a token? What problem is being solved? What is the team behind this? Do they have a great team? Do they have good advisors? Do they have a team of great software programmers? Do they have a track record? Do they have working software? Is this just vaporware? What's the likely global reach of the problem that they're trying to solve? The other good thing to check is, do they have an active community on things like Slack or Telegram or something like that, where you can actually talk to the team, talk to the developers, understand what's going on. So you really got to think about some of the stuff if you're putting any money into these things. Otherwise, you really, you may as well walk to the casino and put money in red or black. The other thing then is, when you get into doing this, because of the volatility of this space, don't have what's called a trigger finger. And I can tell you this from experience. So as a new investor, you're probably going to be a little bit nervous, and you're going to see the prices drop and fall. And you've bought in, you're going to see the price of something at some point drop, and you're going to have an instinct to sell. And unless you've got solid news that you can attribute to that price fall, if you've done your research, you think there's long-term value in that, then stick to it. Back yourself and look at what you're trying to achieve out of that, and what the project's trying to achieve, and decide whether that's something you want to be in for the long term. And unless there's obviously some news in the market that directly affects that, then sit tight. Most people are typically in this for the long-term gains, and if you react to this, there's actually a terminology in trading called whipsaw. And I'll give you a simple example. So you see a currency rising like crazy, and everyone's talking about it at work, and fear of missing out means you've got to jump in. So you jump in and you buy $11,000. So you go to bed that night all excited, and while you're sleeping, a correction occurs in the market, and you wake up and you see the price is at 9,600, then it drops to 9,500. So you panic sell, and at that point you sell for 9,500. You have lost $1,500. what happens then is you see the price rising again. And at this time you wait a little bit and you see it's rising, you think, great, I'm confident. You buy back in at 10,500, and week, 2 weeks, month later, the currency is sitting at 11.5. So your net loss is now $500, not 1,000. So it's great. You've only lost 500 this time. But had you just sat and held in the first place, you'd now be up net 500. So people do that in cycles, and that's why the cycle is called whipsaw. So I guess just make sure that you understand what you're doing when you sell, when you buy. The idea is to obviously buy low, sell high. Sounds obvious, a lot harder to do than it actually is. So the other, I guess, do and don't, and you'll hear this from everyone, is try and buy the dips. So most quality crypto that's appreciating and not being manipulated or artificially pumped tend to have this kind of cycle. And you can see it here. I'll move my mouse on the screen, but you can see the cycle of up, down, down, and then up, down, up. And so this is kind of a, it's market sentiment. And, I won't get into all the technical analysis here. One, because I'm not an expert at it, but two, we don't have time. So you can see these dips though. And, what you should be trying to do is trying to buy and accumulate somewhere in these dips. Now, you're never going to time the exact bottom of that. I mean, if you can do that regularly, well, then you're a lot smarter and probably going to be a lot richer than most of us who are in this. But anywhere on the way down and anywhere on the way up in the bottom of that U is a good time to try and get in the dips. And as I said, don't stress. You're never going to time the bottom. But if you buy at regular intervals on the way down or on the way up, you do what's called dollar cost averaging. And that means the total price of your cryptocurrency over time kind of averages out and meets in the middle. So number 7, teach yourself about buy orders and sell orders and stop losses. So some of the exchanges will allow you to do these, and these can allow you to manage risk. So you can set predetermined points that you can buy or sell at. And they take a bit of the emotion out of it, because you see emotional trading occur. And by using these kind of tools, you can, I guess, take some emotion out of your trading. Check the prices on multiple exchanges. As I showed you before, they can vary as much as $900 between an exchange for one Bitcoin. Some of the Korean exchanges at the moment have been, probably paying 20% more per Bitcoin just because of the Bitcoin mania going on there. The next one is don't be in a rush. So it's really easy to make mistakes. If you send your Bitcoin to the wrong wallet and you type in the wrong address to send it to, let's say you've got Bitcoin in a hardware wallet, you're sending it to an exchange, and you make a mistake in the address that you send it to, you're never getting it back. And that's an example of the numbers you have to type in if you don't have like a scanner or something, but you have to type in this and get the case exactly right. You get one of these digits wrong and it's gone. So double check, triple check. It's very easy to get this wrong. And as I said, malware does exist that swaps this stuff. So know the address you're sending to, and just before you hit send and you've typed it in, double check again that the same digits are there just before you hit send. Okay, so now we're going to talk about where to learn a bit more. So here's a bunch of places that you're probably going to spend a long time. And I'll click on a few of these. So CoinMarketCap. CoinMarketCap is fantastic. It lists all the cryptocurrencies. As we can see, there's 1,339. Right now, we can see the current price of Bitcoin, 14,740. You can see the trading volume. You can see all the other currencies like Ethereum, Bitcoin, Bitcoin Cash. And you can scroll down the list. You can go into one like Bitcoin, then gives you the pricing for the year. And if we go to the last day, we can see the volatility that we've had up and down for the last day. Another really great and interesting feature in here is this thing called markets. So you can click on this markets tab and it tells you where it's selling for what price and which exchange. So you can see BitMEX, we've had over $2 billion worth of value in here, BitThumb, Bitfinex. You can also see the price differences across these different exchanges and the volumes in here. So that's a great way to see what type of exchanges out there and what exist. And there's also all kinds of other tools in here, but I'll just leave it at that for basic capability. So you will spend a lot of time on CoinMarketCap. The other one, as I said, is the Australian exchange comparison, so Blockcoin. So this is a great one to compare the prices on all the different exchanges in Australia. CoinStop is the other one I said before, where you can buy hardware wallets. And CoinSpot is an exchange as well. So that's one of the Australian exchanges that has all kinds of currency. You can see all the ones that they allow you to trade in. So there's Bitcoin, Ethereum, Bitcoin Cash, Ripple, Dash, Monero, Stellar. So all the big name coins are here that you can trade in. So they've got a great number of coins to trade in. ACX is the other one that I talked about. So this is a nice little exchange. If I go to trade now, here you can see that they trade Bitcoin, Bitcoin Cash, Ethereum, and this one here called HSR, which I don't even know what it is. So let's have a look. We can find what HSR is here. H-share. So that's what they're trading in on there. Right, and finally, there's this other great site which has got lots of information on Bitcoin called Blockchain Info, and this one lists all the blocks being mined. You can go to data and go to stats, and this tells you all stats about what the current transaction fees, what the current mining costs and revenue are. But there's a great one down the bottom here called unconfirmed transactions, and you go in here and it gives you a list and says right now there are 105,000 unconfirmed transactions. So this is quite low today. On Thursday last week, this was at about 250,000 unconfirmed transactions. What that means is it just takes a lot longer for your money to go from your wallet to the exchange or vice versa, because you're effectively sitting in a queue. And this is one of the challenges with blockchain, or the Bitcoin version of blockchain, is it doesn't have the kind of throughput that something like the Swift network that processes banking transactions have. Visa deals with hundreds and thousands of transactions a second, and blockchain manages about 7 transactions a second. So there's a very different level of scaling that occurs. So the other thing then is, where can you learn more? And there are some fantastic resources out on the internet, and these guys have really helped me, so big shout out to all of them. I'm not going to click on all of them here. There's a few that I watch. There's many more. Crypto Daily is one that I love watching. He's an English guy, and he's just super funny, really smart guy. Lots of daily updates, but he does it in a very humorous way, and gives you a good laugh while you learn. There's another guy called Superman, calls himself the cryptocurrency superhero. He's also got a Udemy course that you can buy, which I've heard some good feedback on. I haven't done it myself, but all the people who follow him seem to rate it. But he's a very charismatic guy, also really hilarious and funny. So you'll learn a lot from him. Another guy I watch is called Data Dash, and he's really great on trading advice, teaching you a little bit about trading, but also market advice and just sound analysis, just really smart. There's another guy called David Hay, and he's an Australian guy actually, and he's living in the USA, and he's got some of the smartest descriptions of what cryptocurrencies are, what different ones do, what their teams are, what their backing is, talks about things like forks, talks about how the blockchain works. Go read some of his back articles, but he has a way of explaining it that is just brilliant. So really, really good, useful person there. Another guy called Chris Dunn. He's got some good perspective on markets, but he's not that active. And then another American guy called Crypto Bobby, who's a really down-to-earth IT guy who talks about his experiences in Bitcoin, and you can learn a lot from all of these guys. Finally, who do I follow on Twitter? So Twitter's a great place to keep up to date with kind of breaking news, if you like. So some of those guys I follow. Michael Suppo is Superman. Box Mining is another guy I follow. Tone Vase for trading, really interesting guy. Vitalik Buterin, he's the guy who invented Ethereum, so he's always interesting to follow. There's a thing called Cointelegraph News, which gives regular updates on what's happening in the industry. That's a good one. And Crypto Bobby, I also follow him on Twitter. He has some funny tweets. So you can hear a lot of terminology, when you get into this. Some of it's going to be scary. I've listed a few here, things like fiat you'll hear, and that's effectively government issued currency. So our Australian dollar is fiat. You hear things like a whale. Whales are people who own a ton of cryptocurrency and possibly can influence the markets. So because of the low market cap relativity of things like crypto, one of the dangers is you do have people who hold very large sums of this, and they can impact the market. They can dump a lot of cryptocurrency and drop the price. They can buy a lot and increase the price. They can put sell walls, buy walls in exchanges, and generally affect the price, which, you know, is again why this can be something that you've really got to think about as you get into, because it's, you know, it's a bit different to normal trading of stocks. You hear terms like bullish, which means there's an expectation that price will go up. You'll hear terms like bearish, assuming the market is not particularly active and prices are decreasing. You also can hear altcoins. So I talked about that before. Altcoins are effectively alternate coins, and anything that's not Bitcoin based on other types of blockchains are usually referred to as altcoins. Tokens is another thing, and that refers to the currency of projects. So there's a really great thing about altcoins is that businesses who've got a great idea nowadays who want to start up their business used to have to go to venture capitalists for funding. What they can now do is, if you've got a great idea, you can start a cryptocurrency and do what's called an initial coin offering. And from there, people who love your idea can buy your token. And usually they buy Ethereum and then they transfer that to you and buy your token. And that's effectively them buying into your organization, you giving them a token that is saying, I'm expecting this to be worth something one day. And for the general public, it means we get access to great ideas early. You can do your research. And in the past, you would have venture capitalists or big hedge funds who would get access to IPOs early and new great tech, and the general public would never have a chance. So ICOs allows you to get on board with some new idea. If you believe in it, buy into it, and that idea, you know, really might be worth something in a little while. There's some great projects out there. There are people, you know, inventing the distributed internet, a coin called Golem. There's, you know, there's all kinds of cool ideas out there with people doing things. So that's what you'll hear, this term ICO, which is, as I said, similar to an IPO. The other term you'll hear is FOMO, fear of missing out. Generally leads you to make really stupid trading decisions. The other thing is FUD, so fear, uncertainty, and doubt. And the crypto markets are quite interesting. They can be really affected by this. So news breaks that a Chinese exchange is going bankrupt, or the particular government in a particular area regulating Bitcoin and shutting down exchanges. These can have drastic impacts on the prices of different coins. And so, you know, one of the Chinese cryptocurrency coins called Neo had a really big impact when the Chinese government said, we are going to be regulating Bitcoin, cutting access to exchanges. Sometimes it's based on real news, and other times it's fake news. So FUD, fear, uncertainty, and doubt. People love to spread it to manipulate prices. You're also going to hear this funny term called HODL, and it's basically a typo. So there's a really funny post, and you can click it there. And I'll put all of these links down below in the description, so you can go to them. But yeah, it was a lady, I think, or I don't even know if it was a female, but it was someone who was talking about holding, and they accidentally typed hodl, and just the funniness of their post, it went viral. And now the term for holding cryptocurrency long term is called hodling. I got some of these off this list. There's a great link. If you go to this particular website here, it's called Crypto-Minded Glossary of Currency Terms, and here you can see all the terms, and there's a whole lot more detail on a lot of the terms that I haven't had time to cover today. But yeah, go check it out. Okay, so you have decided to listen to some of this knowledge and get into Bitcoin. Well, welcome to your future. So there are going to be many interesting times ahead of you, and things are going along steadily for a period of time. You're then going to have some crazy rises where you see this is happening, and then you're going to have really crazy rises where, you know, over the last week and a half, 2 weeks, the price of Bitcoin has just been going parabolic, and no one's expected that. But then you're also going to see this, and this has happened over the last sort of 24 hours as well. So And we've got some events coming up on the 10th, actually tomorrow. There's a futures exchange opening, and there's another one called the CME exchange on December the 18th. And these are going to allow futures trading against Bitcoin, and they're going to allow people to go long or short on Bitcoin with financial derivatives, and effectively bring in what they call the institutional money into the market space. And I think the impact that this is going to have on the price is going to be something like this, right? There's going to be a lot of volatility in the industry for a while. It's going to be a crazy ride, but I think long term it should have a positive impact. So we'll see. Once again, so so thank you very much for watching this. You'll see there it says AKA the Cryptopanda. I was on a recent business trip to China, and we visited a company called Tencent, and they had these awesome panda masks, and there's me and one of my work colleagues there debating Bitcoin versus Ripple, and we just couldn't stop talking about cryptocurrencies the trip, and so because of this they called me the Cryptopanda. So that's where it came from. And just the final reminder once again, cryptocurrency trading is high risk. Only trade what you can afford to and be prepared to lose. It can be like gambling. This information is for your education, and everything in here is my views, and certainly nothing in here constitutes investment advice. So please make your own decisions and be careful out there and have fun. It's the technology in here is fascinating and it's very interesting. And if you have any comments or thoughts or any corrections on some of the things I've said here, this is my very first YouTube vid, so be kind, but leave me some comments. And if you want to ever hear more on anything, then let me know. See you out, Chris.